All right. Hey everyone, we are here again. This is Nitin, and joining me is Dawal. And today we are going to talk about the stock market on this 2020's TV podcast discussion. And great to have you with us. So, Dawal, we're in this unprecedented time with uh, close to 30 million people out of jobs just in the US, uh, more than a million people in the US infected, and several thousand people have lost their lives across the world. The economy has come to a standstill. And when we look at the stock market, it seems like nothing happened. So,
About a bad week, right? that
yeah.
that's how much it's gone down. Yes.
So, what are we looking at? Like something around 8 or 9% from the highest we've ever been?
Mm-hmm. Yep.
What gives? I mean, what do you think is going on?
That's a really good question. I think short answer is I don't know what's going on, which is always an interesting place and a scary place when
Yeah.
you're an investor, right? But I think everyone's in that space, and everyone's sort of trying to figure out what's going on. And quite frankly, until they do, they've essentially just paused.
Hmm.
Right. So the trading volumes, generally speaking, is down,
Yeah.
and people aren't really selling much, aren't necessarily buying much when it comes to general overall stock market. So everyone, I think, is just trying to figure out what's going on. Um, what does this all mean? That
Hmm.
kind of question. The commodities have sort of uh,
Hmm.
change the game, change sort of what's
Yeah.
happening, with oil prices and things like that. So everyone's trying to figure out what all of this means.
Hmm.
I think another great factor that we can touch on today is, the government sort of stimulus,
Right.
which is really a misnomer. It's really disaster relief,
Yeah.
but that additional money coming into the market, what does that all mean? Um, Again, bond markets, the Fed is sort of stepping in and buying a lot of bonds. So all of these factors are coming into play, and people who just are sort of making investments and just trying to manage their portfolios are trying to figure out what's going on.
Yeah.
And I think all of these factors will be really interesting for us to talk about today, so I'm excited to get into it.
Yeah. And you're right. This disaster relief money that is coming in, just over $3 trillion. Uh, I don't know if it makes up for what has been lost and what will be lost between now and the foreseeable future as we continue in this state of you know lockdown. Uh, we are starting to hear things about states opening up as soon as in the next few days.
Yep.
However, it's not likely to be anywhere close to the activity we've had in the past. So, do you have a sense for some numbers that might be boosting the markets or just even keeping them where they are at?
Yeah, so I think the initial package, I think it was about 2.3 trillion
Hmm.
that the government passed, would be would be equivalent to about a month and a half worth of
Right.
GDP, right? So
Hmm.
that was supposed to sort of get us through the worst of this pandemic,
Hmm.
which I think we're already through. So that funding is already used up, and its effects are going to start to sort of
Hmm.
uh, less felt as we go forward. And I know Congress is already working on a second package, which should come out hopefully in the next week or so. So I think that is an interesting sort of start. And Federal Reserve, as soon as the pandemic started, another sort of unprecedented step that the Federal Reserve took
Hmm.
is drop the interest rates down to 0%. So all of those things do give you a little bit of confidence, right? Government is there, Federal Reserve is there to backstop the economy. So all of these forces are coming in to fill the void that we're sort of experiencing by severe lockdown and not going outside. So I think that's a you know that's interesting, and that gives us hope.
Mhm.
um, but I'm not sure how far that takes us, right?
Yeah, and you're right. So that brings into question for me the whole thing with Warren Buffett, and how he has broken his own rule, or rules I should say, right? His first rule is never lose money, and the second rule is don't forget the first rule.
Hmm.
However, with getting out of the airlines that he was holding for several years, he did sell it at a loss,
Right.
right? So that is very intriguing to me, but also very telling of the times to come. What are your thoughts?
Yeah, no, I mean, first of all, hats off to Warren Buffett. I think he's 89 and he did a 5 hour marathon, sort of a webinar style
I know.
town hall, which, I mean, to me, if only my body and my mind worked as half as much as Warren Buffett's, I'd be happy.
You're eating and drinking the wrong kind of food.
Yeah.
You gotta eat burgers and Coke.
Right, exactly. McDonald's for breakfast. I need
Yeah.
to change that. But no, he's a extremely smart investor, one of my sort of idols and someone I look up to. And yeah, I mean, he broke his rule for the first time. He took a loss.
Mhm.
And that's because I'm sure he and his team felt so strongly about the airlines that you know he doesn't think that they'll be able to come back very quickly from this downturn. If he thought that the recovery was sort of a V-shaped recovery and would sort of bounce back, I don't think he would have taken that step. Um, so that's an interesting sort of perspective. Um, the other thing that sort of surprised me a little bit more from that town hall is that he said that he hasn't bought anything in the last 2 months, right? And that's surprising because we did experience a severe downturn.
Mhm.
We went down to the Dow Jones went down to 18,000 at one point. Yeah.
Mhm. Yeah.
So it did open the door for some investments, but I suppose with Berkshire Hathaway's sort of cash hoard that they have at this point,
Right.
they probably take a little bit longer than you and I just
Mhm.
day trading
Yeah.
to actually build up a position. So um, to a certain extent, I understand that, but um, if he's not making any moves, that means that he's still in that doubt phase. He's
Mhm.
still trying to figure out what's going on. But more importantly, I think it also means that he's expecting things to get worse, right?
Yes.
Um, so, and stepping out of the airline just reinforces that sort of belief.
Mhm.
Um, but to me, if you don't feel good about the airlines, then you probably don't feel good about the hospitality
Correct.
industry, right? All the
Mhm.
hotels, all the other things that go along with
Yep.
travel. So you sort of have to follow those dominoes and see where that takes you. What do you think about hotels and restaurants and all those kinds of supporting businesses?
Yeah, I'm with you. So one is, getting out of airlines, but then why just airlines, right? And what does that entail? And what all does it take down with it? Uh, so to me, it's again, I've been trying to make sense of why is the market not showing the reality, and what is keeping the markets up. Yes, there is money that is coming in. Yes, there is, for lack of a better term, disaster money or bailouts, but it's not justifying the length of time things are going to be out of sync. And uh, you know hotels are hurting, airlines are hurting, cruise lines are hurting. We talked about briefly, how CCL has taken what, close to $3 billion to just stay afloat.
Yep.
And Airbnb, which is also in the hospitality sector, did another $1 billion at half the valuation or close to it. So everyone is hurting. And if if Berkshire is not going in and putting the money just yet, they're obviously seeing something that they're either not confident sharing just yet, or smart people are smart and they know just to wait and watch, not to sell what they have so they don't miss out on any kind of continued upswing, uh, but also not selling and just kind of holding on to cash. So because there is a lot of cash out there. So I don't really have a read on this other than just trying to put pieces together to see if we could make any sense, or go in and say, I'm going to have a 25-30% position. I'm going to hold on to a little bit of cash, and maybe what seems to be the flavor of the season, go and invest in some bonds, right? Corporate bonds, where I can give some life to some of these companies that I truly believe in. And if they come out on the other end, make a decent two-digit return on it.
Right. Yeah, I mean, bonds are interesting right now because the yields are pretty much at all-time lows,
Hmm.
and that's because they have been so popular. People are buying them up, and Fed has also sort of stepped in and is sort of backstopping that market. Um, but yeah, I mean, the only thing is you have to be okay with those extremely low yields.
Hmm.
But I think the other very important thing that you touch on is, having a whole lot of cash on the sideline. Um, I, I think is really important in this kind of an environment, because there is so much uncertainty, right? Cash is king because in times of uncertainty, you want to have something to sort of, help you go to sleep at night.
Yes.
And I think, as we sort of, I think we'll see over time, valuations change, because right
Hmm.
now, frankly, okay, so this is sort of going back to the big picture, but one thing I've noticed is that the valuations haven't changed much for especially the larger companies, but
Yeah.
even going down the line, to mid caps and small caps. And that's because valuations are essentially based on two things, right? It's the earnings of a
Hmm.
company multiplied by a ratio,
Hmm.
and you end up with your value, the PE ratio. The problem is the earnings. We started with one sort of a benchmark in
Hmm.
January, sort of our expectations for 2020. Um, by the end of the first quarter, everyone sort of threw up their hands and said, "We have no
Hmm.
idea what's going on."
Right.
So we're not necessarily withdrawing the earnings because we don't have anything to replace it with. We
Hmm.
can't give you a new number. We don't know how much we're going to make in 2020.
Right.
Now, for most analysts and people who are doing these calculations, if you don't have an earnings number, what do you like?
Right.
Where are you getting your valuations?
Valuations. Yeah.
And at the end of the day, I think a lot of analysts have just chosen not to change that earnings number
Hmm.
because they don't have anything better to replace it with,
Right.
right? Um, and obviously, the earnings are going to be less than what you were expecting in January because obviously the economy is sort of shut down for 2 months or more. Um, but if you don't have a better number, then you really can't make any decisions.
It's interesting to me though. You would think with the kind of data, with the kind of intelligence, with the kind of software and analytical tools that we have access to in today's age and time, and looking at it, there is a fair bit of understanding in our community, if you will, of what people are spending money on, right? We've been at this for what, 40 days now,
Mm-hmm.
right? There has to be a good sense for the kind of things that people do and can want to spend money on, even with this uncertainty of if I'm going to have my job, or, I mean, look, even if you don't have your job, you're still going to eat, right? You're
Yep.
still going to do, and again, this depends from person to person. You will still want to spend on something that might be discretionary, but is for you, that it's a need and not a want,
Mm-hmm.
right? So I would think that in the last month and a half, we should have a decent sense, if not a perfect sense, of being able to come with these numbers. The companies may not want to do it. They may not want to make the analyst's life easy by giving them the numbers like they do.
Mm-hmm.
But is that really a good enough answer for the analyst to say, oh, I'm used to projecting based off of what I'm given and then judging if it is good or not? Or do they step up now and say, looking at all the variables that we have around us, we think this is what's going to happen and this is a fair value, and hence you should rate it or buy it or sell it, whatever.
Right.
So I don't know if that is starting to happen. I haven't gone out and looked for that
Mm-hmm.
myself, but it's a little disappointing if I can sit on that high chair and judge that we are not seeing that kind of data, because I don't know if anybody wants to come across as, oh, this person was wrong.
Right. Yeah, exactly. I think inaction is probably because you don't want to be, you don't want to be the only guy who was wrong on the street, right?
Right.
But to that extent, I think a little bit of that did happen when the Q1 results started coming
Hmm.
out, right? Because when the Q1 results started to come out, you saw really how bad March was. And that was really the only month that was captured in Q1. January and February in most cases were quite normal. So then you take that 1 month worth of data and you try to extrapolate. It's not because again, how long are you extrapolating for,
Right.
right? No, nobody knew that, or even nobody knows that to today. But I think what the analysts tried to do is make a judgment
Hmm.
on sort of how quickly we can reopen,
Right.
and based on that how quickly we can sort of see the revenues come back to normal. um, the problem is it's really it's an imperfect science, right?
True.
You're just guessing.
Hmm.
So I don't think anybody put too much stock into it, and I don't think anybody made big decisions based on those valuations. um, Having said that, another thing that I find really interesting, and I really want to get your take on this. um, there's a huge discrepancy between the big companies, the top 5 6 companies, really the top 5 companies, but between them and the mid caps and small caps. um, and quite frankly, those top 5 companies are Microsoft, Facebook, Apple, the usual suspects. um, these guys, their business models are actually set up for this, right? For example,
Hmm.
Amazon is really built
Right.
for this kind of thing. You can stay at home and make all of your purchase decisions
Hmm.
from your computer. um, Apple, they went into the streaming business in a
Hmm.
big way about a year and a half ago, and they're still, that business is still flourishing. Netflix, subscribe, they're not losing subscribers anymore. If anything, they're getting more subscribers. And so these businesses, the technology companies, are really benefiting. And obviously you can see those stock prices go up, but they control such a huge part of the overall index that the bottom 40% could go down. But if
Right.
Apple goes up, it sort of makes up. The index
True.
doesn't look like it's going down. What do you think about that imbalance?
Well, there is one part of it is the imbalance per se, and obviously the powers that be have done the math behind it to keep some of the stronger, bigger companies on one end and some of the smaller on the other. What I find interesting though is, I want to address two things there. One is, as I think it was yesterday or the day before, when a lot of the states started talking about reopening in the next few days. Uh, Two of the stocks that you mentioned, Amazon and Netflix, were effectively down, right, with that news. That said, if you think about the likes of Google and Facebook, right, we would think that we are all at home and the time that we are saving, we are using that to watch content on Netflix, on YouTube, on Facebook, and just browse and connect and do those kind of things that naturally tend to increase the usage of these platforms. The one thing that I find really interesting, specifically for Google and Facebook, who generate most of their revenue through advertising, is if you think about Expedia, for example, they spend close to $5 billion with Google on ads.
Yep.
They're not going to spend anywhere close to that number,
Yep.
at least in the next year, right? So that's a huge revenue dip for Google. And I would imagine the same thing with a lot of other companies. Now, I haven't had the chance to look at this, though I would imagine there would some of this would be offset with the additional revenue that these companies would now get through some small businesses, right? Think about restaurants who do need to advertise with Google Business, or put their thing on Facebook, or be on the marketplace to say, hey, we're in business, we are open for takeout, just come to us.
Yeah.
I don't know if that will recoup or be even coming close to the $5 billion they would lose from one client,
One kind.
right?
Right.
So yes, their business models are set for something like this. However, the business itself would still take a hit
Right.
because the ones that are feeding it are getting hit in a major way, right? So I find that very interesting that their consumption might go up, but their revenues might still get hit pretty bad.
Right, right. Yeah, I think Facebook in Q1 already highlighted this
Yes.
this fact, right? Because the users are going up, the time spent on the platform
Yeah.
is going up, but the revenues are going down because the advertisers essentially disappeared in March.
Mhm.
So yeah, it'll be interesting to see how quickly those advertisers will come back. And I think with businesses opening, I think that'll be a big boon because now even the smaller businesses, restaurants, like you said, they're going to come back. Um, Travel sector, I think, is out for rest of the year essentially, but a lot of the other sectors will come back and start advertising. So it'll be interesting to see. I think the automotive sector is another really key
Mhm.
sector that spends tens of billions of dollars on advertising each year,
Mhm.
and that business has been completely decimated
Yeah.
in this pandemic. So it'll be interesting to see how they'll come back. And the new, more modern automakers, essentially don't do any. Like for example, Tesla doesn't do any
Mhm.
advertising whatsoever. So if GM goes down but Tesla goes up, you can't expect one to replace the revenue, especially for the search engines for the other.
True.
So that'll be interesting to um, see how that sort of one replaces the other kind of
Yeah.
conversation.
Yeah, you're right. I don't think it'll be a net replacement, but if we look
Right.
at the longer term trend, just like with everything else, uh, I think it's going to end up benefiting the Googles and the Facebooks, and and even Microsoft, right? Uh, Teams has been a huge win for them,
Yep.
because it has been out for a while, but this is when they really picked things up, and they came in at the right time and positioned it, and it has really taken off for them. So I think over the next couple years, all of these companies that you talked about are going to end up benefiting from this acceleration in the digitization of all the things that we are working on. It might take a little bit of time to get through these humps where the bigger losses come back and start spending the money again, closer to, if not at the same level of what they were doing before.
Right. Right. Yeah, and that's sort of the key thing going into the Q2 planning,
Yeah.
right? Q2 valuations, because it'll be interesting to see what businesses open up first or open up, the earliest, and
Yes.
what businesses sort of lag behind. But the other thing that I'm concerned about is, how quickly will the consumers come back, right? So one stock that really, the large mall plays. So that you think about Macy's, J.C. Penney, um,
Hmm.
uh, Dave and Buster's, which is a big arcade company. Then you have restaurants like Cheesecake Factory. The
Hmm.
the interesting thing going into 2Q will be how quickly will those consumers come back. And quite frankly, especially with restaurants,
Hmm.
if you expect them to have them operate at 50% occupancy, they're not going to make any money.
True.
So, is it even worth it for them to be open? Um, and if, in my mind, the calculation is, if there is government subsidies, if there is stimulus coming their way, then is it better to stay closed, collect on the stimulus
Hmm.
until the pandemic really goes down, versus open up, lose the money coming in from the stimulus package, but then not have any customers? So you can open first but not have any customers, or open last and get a flood of customers as soon as you open. So I think that'll be an interesting sort of thing to see.
I think there is also a bit of if you look at the implications of I don't know if it's the community or the just the general um, impression of when you walk into a mall or a space or a within a mall, if you go to the food court and if you see half of them are closed up. So I was on a webinar with where we had Rick Caruso as the he wasn't the keynote, he was the person who was talking. As you know, Caruso Properties is the owner of the Grove, the Americana, and a bunch of other affluent malls in Southern California. And what he's doing with his tenants, restaurants and others, is he has gone out and said, stay open as much as you can. There's no rent due till you guys are back up on your feet, right? Just his his malls are open not for business but for families to come in and hang out and have an escape, right? So the restaurants there are open again for takeout and stuff, but he's taking that approach because he believes in the power of the community, right?
Right.
If we are mentally and physically healthy, we are much likely to come back stronger and sooner. Now imagine, if this is a Simon Property says, no, we want our rent. If you're going to be open, we we want you to pay. And if some of them are struggling and decide to not be open, at the end of the day, it creates an impact back on Simon Properties as the mall owner,
Hmm.
because it provides that sense of, oh, is it not safe yet? Why are these guys closed?
Right.
Right? And looking at that, maybe the next person says, hey, maybe I should also not be open because they're not open. They're not expecting people to show. Why should I be open and take this hit? So it's it's almost a letdown, a pull down on the sensory factors, but also just the morale of so there is I think more than an economic aspect to it, which does impact the economics but is not led from the economics.
Right. No, I absolutely. We should be talking to a psychologist
Yes.
to figure out, consumer behavior at this point.
Yes.
But you're absolutely right. And one of the first dominoes to fall was J. Crew. They filed
Hmm.
for bankruptcy just a
Yeah.
couple of days ago, and the major factor behind that was the rents, right? And to the
Yeah.
extent, landlords are able to forego rents for a month or two, until the tenants can get back up to, back on their feet. I
Mhm.
think that makes a lot of sense. But then again, going into the public markets, if you think about all the REITs that are,
Mhm.
the
Yeah.
the the investors are, clamoring for sort of the additional cash flow that's supposed to come through. And if those REITs, like Simon, if they start to sort of forego rents, that can create a domino effect on the other end.
Mhm.
So that creates an interesting sort of challenge for those landlords. Um, another sort of thing I've heard is instead of um, instead of essentially forgiving that rent, they're essentially adding it on the back
Right.
end, right?
Yeah.
Uh, to me, I don't know how much that. I mean, that obviously helps in the short term, but that can also create a situation for the tenants, because
Mhm.
some tenants may not necessarily want that because they have fixed terms, and essentially they're counting on those terms. Um, so by you know pushing it just a little bit further back, I don't know if that makes it interesting for tenants. um, Obviously in the short term, they'll take that versus going out of
Right.
business. But in the long term, it may still push up those bankruptcies and those vacancies within a mall.
Mhm.
um, but I think that that's a great thing. If you can afford to forego rents for a few months, you can essentially support those retailers and
Mhm.
help them get back on their feet. I think that's huge. And
Yeah.
I think that those malls will sort of flourish
Mhm.
when things start to open back up.
Yeah, and you're right. I mean, not everyone can do that, right? They have their shareholders to respond to, and you know, books to maintain, and things of that nature. So not everyone is going to have a great property owner that can support, and who knows for how long, right?
Right.
And but yeah, given where things are, I think that's the best we all can do, right? In bringing this back to the stock market, I don't know if that hope or that expectation is what is keeping people from really dumping the stocks.
Mm.
Mm. So yeah, what are your thoughts on?
That's a tough question. I think we'll see a big sort of another downturn in the stock market when we start to see Q2 results.
Mhm.
So it doesn't have to be, in July when the results actually come out. It
Right.
can be as early as June. It may be even before then, when people start to realize that we're essentially going to wipe out, instead of 1 month worth of revenue, we're going to wipe out 2 months worth of revenue.
Mhm.
Or even when the business is open, the revenues aren't there and businesses are essentially running in red. So
Yeah.
it may be 3 months worth of revenue. um, Once we sort of see those kinds of things come out, I think those, again, the analysts will go back to their Excel files and those valuations will start to sort of go down. And in those cases, I think that's when we'll probably see a second dip, because
Mhm.
now you're essentially changing your base in that
Right.
PE equation. So I think there's probably more pain to come. I don't necessarily know if we'll test the lows that we reached, the 18,000 in the Dow. But I think we'll probably approach that. We may test it. I'm not sure, but we'll definitely approach that. And yeah, that'll be interesting, because hopefully by then we'll be coming out of the pandemic, and then the
Right.
stock market going the other way. So it'll be, the dichotomy repeated. But
Yeah.
I think that'll be an interesting time. Do you think that's how it's going to go?
In terms of if we will test the 18,000 levels, I hope we do, because that would be more realistic of what the what the economy is doing and is likely to do over the next uh, I don't know, a year or two. And I don't know when it will be, but it might as well even be, after November. uh, So I don't know the amount of money that is being thrown at this, and there is a vested interest behind it, and it's I don't have the crystal ball to see. I'm no expert in all of these matters, but I do have a feeling that it will be somewhat and somehow connected to the fact that we are in an election year, and that may have something to do with it, if not a whole lot.
We're not a political show, so we're not going to
No,
get into that topic.
yes.
But you're absolutely right. The fact that this is happening during an election year, when Congress and the president and most of Senate is going to try to keep
Hmm.
their seats, they're making a lot of these decisions based on the fear of what's going to happen in November
Hmm.
versus based on the true science
Yeah.
that's available to us. So that definitely is a factor. It'll be interesting to see how it sort of plays out. I'm not sure if we'll ever do an election episode, but I think that'll be an interesting thing to see.
I'll be mostly quiet if we do one.
Yeah, we don't want to get into too much controversy.
It's not because I don't like controversy or I'm scared or afraid of it. It's just I'll be showing how much I know about the topic.
You prefer to stand back, right?
Be like, sure, this is what you think. Absolutely.
No, I think we're better off sticking to things we know about and
Yes.
things we can talk about. So that's good. Um, cool. So, how? Any other thoughts on this topic on the stock market?
Um, I think we touched a fair bit on pretty much a lot of the things that we had discussed and seemed worthwhile discussing. Um, no, we talked about bankruptcies. We could talk about. I mean, you can have some predictions on who are the next five that are likely to file. Uh, uh, but yeah, I don't know. I can't think of anything specific that we didn't talk about.
Okay. Yeah, that's I don't know if that's necessarily morbid part of sort of our psychology where we're betting on what companies go down first. But I'm sure there will be more bankruptcies. So
Yeah.
it's definitely something that we need to keep an eye on. And then again, there are companies that come out stronger on the other end of the
Yes.
bankruptcy. So
Right.
we'll see what businesses survive and then thrive going into rest of the decade. So
Yeah.
a lot of interesting things happening. Absolutely.
Yep.
So I think with
Exciting
that,
times.
we'll wrap it up. And
Yeah.
I think it was a fun conversation, fun episode. Um, take us out.
All right. Well, let's hope we all make money coming out of this. And
Absolutely.
yeah, if Warren didn't do it, we'll stick to it. We'll stick to his two rules.
Absolutely. Absolutely. It's he's a good guy to follow. So yeah.
Yeah.
Awesome. All right.
All right. Until next time.
Sounds good. Bye. See you later.
Yeah. Bye.